Now, I wanted to pick your brain real quick because you're talking to these institutions. Is anybody talking about the 4-year cycle? Are you talking about the 4-year cycle with them? Are they talking about the 4-year cycle? Is
No.
this
Institutions do not
belief?
know what the 4-year cycle is. This is a crypto thing. This means you spend too much time online. This is not normal. People do not talk about the 4-year cycle.
Retail talk about this because we want to have something to talk about. But these big
Yeah, that's right.
institutional players, they're like, who cares? Just buy more Bitcoin.
Yeah, they're like, what are you talking about? No, it's yeah, this thing has gone up, so I'm gonna buy it.
Okay, looks like we've got Hasib in the studio, so let's bring him in.
Hello, hello.
Welcome, Hasib. Nice to meet you.
Nice to meet you as well. How you doing?
Doing fantastic. Thank you so much for taking the time to come and talk with us today. It's going to be, I'm excited to talk to you. I'm excited to talk to you. Now, before we get into
My
some
pleasure.
questions, I just want to introduce you. So, you're a managing partner over at Dragonfly Capital, which is a crypto venture fund. So,
That's right.
before that, you were a software engineer at Airbnb, Coinbase acquired Earn.com, as well as being a high stakes professional poker player, which is
That is
fascinating.
correct.
I want to start there because that's super interesting. That's super
Okay.
interesting. So, look, being a high stakes professional poker player, how does that translate into everything that you're doing right now in the crypto world?
Okay, so poker is a very interesting education because it teaches you a few things that end up becoming very, very important skills no matter what you end up doing in business. One of them is managing your emotions. In order to be a good poker player, you have to be able to go through the ups and downs of the natural volatility, the randomness of playing cards. Most people do not have that. That's a big part of the reason why crypto, when I came into crypto full time in 2017, a lot of my friends had also come into the space. It was a very hot space at the time. Most of them didn't stick around. And the reason why most people didn't stick around was because this place is really tough emotionally to stick through. And so, I think you were just playing with the Zcash chart right before this. Zcash, infamously brutal trade if you were holding it for a long period of time, because there was a huge valley of darkness that Zcash and most of the privacy coins went through. And they've recently had this renaissance as people now increasingly have started to understand the value of privacy, especially as more and more of crypto has become increasingly institutional and more regulated. It almost like creates more of a space for something like Zcash. I think there are a lot of things like this in crypto, to say nothing of the bank failures and the FTXs and all the ups and downs that we've had to experience as an industry. Being able to weather that and keep your head on the shoulders and keep moving in the right direction, it requires an incredible amount of emotional fortitude. So that resilience is something that I had to learn at a pretty young age when I was a professional poker player. The other thing I think you learn is that a lot of the ways, poker it's intrinsically a subversive job. Your mother's not proud of you for becoming a professional poker player. Like the people you went to school with are not like, wow, what an impressive way to spend your life. Now it can be quite lucrative, but it's this kind of, the ability to sort of push these weird, unconventional edges that is the one thing that united all people who became very high level professional poker players. They were all willing to do something pretty weird with their lives and really kind of not listen to authority figures or cultural role models in order to realize, like, oh, actually, I think I can make a lot of money as a professional poker player. Crypto's kind of like that, is that if you sat around waiting for the powers that be or the authority figures in society to tell you that crypto is good and this is a high status thing to do with your career, well, you would have gotten into crypto in 2026. And because this is the year that, all these financial institutions and, there's executive orders and there's laws being passed and, now crypto is really good and high status. But, when crypto was this contrarian, weird, ugly stepchild of the tech world and the finance world, that was really when you wanted to be an early adopter and be committing yourself to the space. So crypto is going through this period. I mean, it's going through this weird period right now where crypto is becoming uncool again. It's kind of weird. It's kind of this, there's a tale of two cities going on right now where on the institutional side, crypto is cool. On the retail side, crypto is not cool. And you will see, like with all things, everything moves in seasons. And there will be a moment when crypto is cool among retail again. There will also be a moment when crypto is uncool among institutions again. And these things move with the tides, right? So, there will eventually be a Democratic president, at whether in 2028 or 2032 or whenever. And probably there's going to be a backlash against crypto on the institutional side. There will be another retail cycle. There always is. There is always something new that's going to animate the great masses and make them believe that, like, hey, I think this is something that's really big and means a lot from a cultural perspective that people get behind. So that's why I think it's very important to be countercyclical. And poker intrinsically teaches you the value of that.
It's really interesting because so many people, this emotional discipline that you're talking about and this counter culture trend that you're talking about, it really is very much how you can succeed in crypto because you have to be so contrarian most of the time. And you'll see that most of the people come in and they only want to get in when the water's warm, right? They only want to buy the tops.
Yeah.
Well, now it's all consensus. This is a good thing. We all like this stuff now. The number's going up. And I always make the joke that the most important technology in crypto is the number going up, because for a lot of people, that's how it feels.
That's right.
Now, I've got an interesting question for you. 'Cause look, working at Dragonfly, you're managing partner over there, and the people you talk to, the things you guys research, I can only imagine this kind of the stuff that goes on. So I wanted to ask you this. What is something that's happening in the cryptocurrency market today that kind of feels small at the moment, but in hindsight, people are going to realize this was maybe part of a larger shift?
Earlier this year, end of every year, I always make predictions for the upcoming year. And so in end of last year, I published my set of 2026 predictions. And in there, I claimed that I believe that RWAs were going to hit 20% plus of total DeFi volumes. At the time I made that prediction, they were about 1%. They've now gone over 20%. Now, if you look at Hyperliquid, half of Hyperliquid's volumes are trade XYZ, somewhere between 40 to 50%. That being said, I think I probably underestimated how fast this is going to happen. I would guess that by the end of this year, it's probably much more than 20%, maybe even like 40+% of the total volumes on chain. I think in the long run, there's going to be more volume on chain for non-crypto assets than for crypto assets. And that's when you really see this thing become like the market for everything. Today, we just announced our investment into this DeFi protocol called Variational. Variational is an RFQ protocol instead of a conventional perp dex. Today, if you're trading perps, perpetual swaps, you're probably trading them on Hyperliquid, maybe lighter. We're investors in both, and I think they're both great. But for RWAs, if you're trading, oil, or you're trading named stocks, you're trading, you go even farther afield, like the universe of RWAs is so big. Just think about all the currencies, all the indices, all the bonds, all the stocks, all the commodities. Right now on Hyperliquid, there's basically like 10 names that are liquid. And outside the top 10 names, that's like 90% of the trading volume. It's just 10 names. And everything else is just, it falls off a cliff for everything after that. But I think you're going to get to a world where basically anything that you and I can go trade on Schwab or Fidelity or Robinhood is also going to be liquid on chain. And I think that world, what it does is in a way very similar to what Amazon did, but for finance instead of for e-commerce. And what I mean by that is, if you think about Amazon, I'm in New York City right now. And if you live in New York, Amazon didn't really change your life that much. I mean, Amazon is convenient, but if you live in New York, you can go down the street and you can, within like a 5-block radius, you can buy pretty much whatever you want. It's the guy living in Wyoming that Amazon completely changed his life, because now the guy in Wyoming can buy anything that somebody in Manhattan can buy. It's this great flattener of access to commerce and to goods. In the same way, if that world that I'm describing of where RWAs basically go completely universal on chain, all of a sudden somebody in Indonesia, in Argentina, in Malaysia can buy the exact same things that you and I can buy. And that doesn't just mean, they can get US dollars via stablecoins. Like, yeah, that's great, but that's not the universe of financial assets that you and I invest our money in. So that world, I think, is comparably disruptive to the world that Amazon created, which is it's a great economic flattening. It means that all of a sudden we democratize the access. So it doesn't matter where you live. The financial universe available to you is the same as everybody else. That's what crypto fundamentally does. It's an economic equalizer.
It's interesting that you bring up the RWAs and Hyperliquid, because we just a few minutes before you came on, we were covering that they just hit a new all-time high in open interest, I think of $2.6 billion for RWAs over on Hyperliquid, which is incredible, because if you're listening to this, guys, you have to remember Hyperliquid only started 18 months ago, something like this. It's very new. And to see it already doing 2.6 billion in real world assets is incredible. And you may think, but the stock markets do so much more. Yeah, but this is an on-chain decentralized finance protocol that's doing these incredible numbers. But it's also crazy, Haseeb. So you're telling me that people are going to increasingly want to trade real world things like stocks and commodities like gold and bonds instead of dog with the hat?
I am saying that. Correct. That is what I'm
That's
saying.
crazy talk, man.
I know. It's wild. But I think at the end of the day, like the addressable market for that is way, way bigger than the addressable market for crypto. Now, that doesn't mean crypto trading is going away.
Of course.
But it does mean, like, look, right now, all of crypto is about 2.6 trillion. That's great. That's less than a single stock.
Yeah.
NVIDIA is worth more than twice the entire crypto market combined. So if you think about the scale of financial assets that you want to tokenize and bring on chain, like just crypto crypto is a drop in the financial bucket. There's over $100 trillion in stock market value if you're just looking at the US stock market, to say nothing of the rest of the world.
It's
and
a
that's just
baby
stocks.
still. Yeah, it's interesting because I remember Larry Fink talking, we covered this on Chill, Larry Fink talking about, well, we're going to tokenize all this stuff. And I was saying at the time, like, oh, it's going to be big guys. You don't understand. If Larry Fink's going on public record saying the tokenization is coming, we're bringing all this stuff on chain, like you better bet your bottom dollar that's actually happening. So if you're an investor out there, you're listening to this, and you're saying, okay, this is all great. Everything is coming on chain. We're going to be able to trade all this stuff. What do we do? Long hype, buy hype, hold hype. I mean, what are some, asymmetric bets, I suppose, in that situation to take the most advantage of this trend that I see only getting bigger?
Yeah. Well, I mean, look, there's some obvious names. In general, I'm not in the business of giving financial advice. I am, but only to institutional LPs.
Of course.
So, I'm technically not allowed to be giving financial advice to the general public, but I'll say, look, the way in which you would express that bet, I think is pretty obvious, which is that there's a small number of venues where most of these things are trading, but the competition's heating up. Like it's never the case. It's never the case that in a market this big, there's only one player. It's pretty much never happened, right? If you look at even, look at Binance. Binance is the biggest exchange in the world. They're really one of the largest fintechs in the world at this point. Binance has competition. Binance has, at this point, steady state, they're like 40% of the market roughly. It's overwhelmingly rare that in a space as competitive as exchanges and as, financial platforms, that you have one player that wins it and that's it and it's over. Almost certainly there's going to be competitors. And that's a good thing, because if you had no competitors, it would mean the market wasn't worth going after.
Yeah, we've got lots of new players coming in. We have Lighter that came in as well, and some others that are getting much smaller market shares. But I always kind of think about smartphones when I think about this, when I try to explain like the layer one trade to people. iPhone is iPhone, right? But then all these other companies came in, and there's maybe 4 or 5 companies at the top that capture 90% of the global market. And then there's some other companies that do something, and somebody has that random phone once in a while, like, oh, what's that phone? But for the most part, you'll see, like we've already seen with crypto, where, Ethereum and Solana are capturing the vast majority of users on the layer one side. And you'll see something similar playing out with the decentralized exchange space, where 4 or 5 will come in and capture 90% of the value. So it's about whether the question for you as an investor listening to ask yourself is, do you think that someone like Hype or Lighter has what it takes to be one of those top 5 in 5 years? Or will somebody come in and, take that market share away from them? Because there's probably protocols coming that have not been launched yet. They're going to eat significant market share.
That's right. And there is, in crypto markets, there's often a second mover advantage as opposed to a first mover advantage. Now, that being said, Hyperliquid was not a first mover. Actually, the first mover was DYDX. That was the first on-chain Perpdex. And Hyperliquid was able to learn from the mistakes of DYDX in order to build something that ended up working. If you look at all the most successful things in crypto, pretty much none of them were first movers.
Yeah.
Coinbase was not the first wallet, nor was it the first exchange. If you look at Solana, it was not the first quote unquote ETH killer. You go down the list. Binance was obviously not the first exchange either. And Hyperliquid was not the first Perpdex. Uniswap was not the first AMM. You go on down the list. And overwhelmingly what you see is that people are learning from the mistakes of their predecessors. So Hyperliquid is a great protocol. They have a great team, very, very successful. But you can see that a lot of the products that they've launched have not really gotten off the ground. Like HyperEVM, it's okay. It's still kind of struggling in order to really come into its own. USDH, the native stablecoin, didn't really get there. They just ended up striking this deal with Coinbase that basically kind of unwind USDH effectively and just basically enshrine USDC. So I think people often forget that just being an incumbent doesn't automatically mean that you're going to win a market. So, the example I like to give is like, Facebook or Meta, huge company, very, very successful. They launch new products all the time that just go nowhere. Very famously, they had their metaverse product, and also their AI is pretty crap. But even, I think people forget this, there's Facebook has a payments product called Facebook Pay. I don't know if anybody knows about this, but like if you go in Messenger, technically you can pay people. There's like a little dollar button. I have one friend who's ever paid me with Facebook Pay. It exists. It's not very good, but just because you're Meta and you have billions of users does not mean that your products are going to win. So it's no different anywhere down the stack, whether you're Coinbase, whether you're Hyperliquid. Markets are tough. New products are tough. And that means that there's going to be a lot of competition up and down the stack for all of these players, because the markets are so big, they're going to attract great competitors.
Yeah, absolutely. This conversation reminded me of Ether Delta. I don't know if you ever used that back in,
of course.
You remember the terrible days of Ether Delta. My goodness gracious.
Trade your spank chain.
It was a good time. It was a good time. Those are different times, guys. Actually, they were kind of the same, weren't they? Gosh darn it, we're trading spank chain on Ether Delta back then. Anyway, it's a whole different conversation of nostalgia.
That's right.
So, look, you guys are running a very professional operation, obviously, and you have an incredible research team, and you guys are getting to narratives and getting some incredible success. And so, for the average person out there, when you guys are looking at these new crypto narratives that are coming out, and to be honest, some of these things are just the same old narratives over and over again: SocialFi, InfoFi, Layer 2s, layer threes, what all this kind of stuff, right? So RWAs is a great example. It's obviously a winning narrative. So what
Yeah.
signals do you look at? What helps you distinguish between something that's just going to be some temporary speculation, like putting a hat on the dog, versus durable developments in the cryptocurrency industry that are going to really move us forward and have staying power to be here 5, 10, even 20 years down the line?
So generally what we're looking for, it's a little bit, you know, when you see it, which is you just kind of have to have some judgment about, okay, you see this trend, you see that people are excited about it. Is there a there? Is there real value being created for the end users? If the thing is a meme coin, or if it's, you know, some viral trend, or it's some social app that people are farming, it's a little bit hard to disentangle the data from the underlying question, which is this creating value for people? But as a VC, that's your job. And you can't really do that just looking at charts. Charts are informative. It's very important to be able to see the data, but you kind of also need the texture of how are people actually using this? Like, can you really put your head into their experience and understand what it's like from the inside to be using Trade XYZ, to be using Frentech, to be using any of these apps, and really understand, is there real value being gathered here? Or is this purely a function of number go up? And if number stops going up, the game's not fun anymore. So the one thing you can guarantee about every number is that eventually it will stop going up. And when it stops going up, that is ultimately the place where you answer the question of, is there real value being created here? Or is this fundamentally a financial game at the end of the day?
Yeah, there's been so many things in crypto throughout I love the Wild West experimentation that crypto has been so far. To launch all these crazy ideas, farming yams back in 2020, or all the other crazy stuff that's happened, NFTs and all these wild, and we always take it way too extreme. Here's a cool new idea. Let's go absolutely insane and start selling pictures of monkeys for $1 million. We get a little bit too excited in the crypto space sometimes, but then NFT technology is very interesting. It's just the speculation went too crazy on it, but it's still here and still relevant as a technology. So it's very interesting to see how these sort of cycles play out. And, the killer use cases of crypto seem to be really narrowed down at this point. We tried all kinds of different things. A lot of stuff hasn't worked. Stable coins are great. On-chain speculation, whether it's RWAs or I keep throwing dog with hat under the bus here, but, that's part of the game, right? People love to speculate on stuff, even if it's just a short-term speculation. That's part of the wild nature and free nature of these markets. So, look, you guys have been through multiple cycles at this point, and now we are once again in a bear market for Bitcoin. How long that lasts for, how much pain we have to endure in this current market narrative, we shall find out. But for the people listening out there, when you're talking to, founders or these institutional investors, and, what's your message to them during these bear market situations? What's the sort of conversations that you're having with them about the current status of the market, and having been through a few cycles, your sort of insights that you're sharing with them?
So when I'm talking to founders, the number one thing that I'm trying to understand is ROI. When you're in a bull market, you can kind of just let it rip. You can sort of spend money and assume that the money's going to keep coming, and that, you can more or less be, I don't want to say wasteful, but let's say aggressive with how you use your capital. In a bear market, every dollar matters, because you can't necessarily assume that there's more money waiting for you, or that you're going to be able to sell your token and use that to recapitalize yourself. So in a bear market, you really have to be ruthless about ROI and understand, what value am I getting for this dollar that I'm spending? The other element of it is that in a bear market, you really can't afford to lie to yourself. So if you are fooling yourself with respect to your traction, with respect to your community, with respect to the utility of your product, with respect to your token, all these things will basically come home to roost. In a bull market, there's a lot of fooling ourselves that happens and is effectively tolerated by the market.
Steve, I'm very conscientious of your time here, but there's one more thing I wanted to get into, because you wrote this great article back in February. I remember sharing it with the channel a little bit back then, reading it, and that was Crypto is Not Made for Humans. And this is so interesting. So you were arguing that crypto may actually be better suited for AI agents than for humans. So what was kind of the thought process behind this here?
So it's always been a little bit mysterious to me that crypto still in 2026 is so hard to use. And when I say so hard to use, I don't mean it's hard to use for, grandmas. Okay. A lot of stuff is hard to use for grandmas. Even like my laptop is probably hard for my grandma to use, but crypto is still hard to use for me. Like, I am one of the most sophisticated people in the crypto world, right? Like relative to, people who are just trading retail or whatever, I am definitely in the top 1 percentile of people. I literally run a crypto fund. And yet when I fund a startup, I do not use a smart contract to write our startup investment agreement, I write a legal contract. And in fact, the startup also wants to write a legal contract. They're a crypto startup. We're a crypto funded company, and we still want a legal contract. Now, why? Why do we want that legal contract? The answer is because if there's a bug in the smart contract, I don't know what's going to happen. They don't know what's going to happen. And we know, even though we both have software engineers that can read Solidity, we don't know what's going to happen. If there's a bug in the legal contract, we know that a judge will look at it and they will do a sensible thing, right? Probably they're not going to give all of both of our money to North Korea because there's a bug in the legal contract. But if there's a bug in the smart contract, who the hell knows? So now if you just think about, like, I still get nervous when I am sending a large amount of money on chain. I still get nervous. And the reason why I get nervous is because I know people who have gotten just totally destroyed from some kind of hack, some kind of bug, some kind of, front-end vulnerability, DNS poisoning attack, address poisoning attack. There's so many different ways in which we can get pwned interacting with crypto. And just think about all the ways in which it's unintuitive. Like, okay, well, in order to transfer something, you have to pay gas, and the gas is in a different asset, and you might not have it in this wallet, and blah, blah, blah. I still make that mistake. If like, oh, I bridged under this thing, but I forgot to bridge some ETH, and so, okay, I'm stuck. And just think about, okay, there's like 15 decimals, and you have to sign this cryptographic hash, and blah, blah, blah. All this stuff is weird. It's very weird. It's not the API that humans generally expect from money. Mm-hmm. And if you are using your bank is designed for humans, right? I mean, Swift is not designed for, if you go read a Swift message, like if you just read the actual underlying like raw message format, it also is totally inscrutable. That's not what using your bank feels like. Using your bank feels like this very human, obvious format of interacting with money. That's what we expect. That was really designed for humans. Now, why do I trust that my bank is never going to accidentally send money to North Korea or do, all sorts of crazy stuff or allow me to shoot myself in the foot? But I'm absolutely worried that crypto will. The answer is because there is intelligence at the bank standing between me and my money. And the intelligence of the bank is the bank processes, the software, the people, the risk management, all that stuff is a layer of intelligence between me and my money. If you have a layer of intelligence between you and your crypto, then all of a sudden, all the stupid things that you and I end up doing of, I forgot to send I didn't send any ETH over there, or, I fat fingered this, or I got address poisoned, or, I had one stray approval, or I didn't read the smart contract. I just saw the admin key got swapped. All these things that you and I do, or could do, or would do, an AI agent won't do, because an AI agent can read the code instantaneously. They'll never not read the code. They'll never not check the block explorer. They'll never not check the Twitter to see if the thing was compromised. They'll never not look on chain. They'll never not check the DNS. They'll never not, all these things, the 15 decimal places are perfectly fine for an AI agent. Why wouldn't there be 15 decimal places? Yeah, that's fine. It's just, a 64-bit number. That's easy. All these things that for humans are unintuitive, for an AI are absolutely perfectly fine. And so that's when it clicked for me that the original cypherpunks, the people for whom they were like, look, the beauty of smart contracts is that if you can read the code, you can verify that it's correct, and you don't need to trust anyone. Well, I used to be a software engineer. I still don't feel totally comfortable reading the code and saying, yes, I think it's totally correct. But if my AI agent reads the code and reads it twice, 3 times, 5 times, 10 times, and my AI agent is a mythos level intelligence, then actually I feel totally fine. And so I think where we're going is that the original cypherpunks who believed that all of this would be totally intermediated by people who could read the code, they were kind of, they were all autistic programmers. And you and I are not autistic programmers necessarily. Most people on chain are not autistic programmers, but your AI agent is an autistic programmer. And so all the stuff that they said that everyone was going to do, your AI agent will actually do that. Your AI agent is more like the Ethereum cypherpunks than we are. And with that sitting in between, actually, I think that is the affordance that makes your crypto as trustworthy and as safe as your bank field. And that's going to totally change our experience of crypto. That's my thesis.
I love it. The future is actually, and I completely agree with everything you said there, because using crypto is a nightmare for people. And even OGs, like you said, oh, well, I didn't check Twitter before I logged into this website that I've logged on every day for the last year, and now it's hacked and now my money's gone. I'm very excited to see how AI is going to make crypto better. And we've seen a lot of interest from the market of AI-related coins and AI-related tokens and protocols, and we're seeing more meaningful things start to be built on chain. A lot of it's as usual, a lot of hype, a lot of speculation, a lot of BS, but slowly but surely we're starting to see more honest things start to come into the market. Is there anything that you guys have been watching at Dragonfly that's sort of intersecting in that crypto to AI world in any sort of meaningful way?
Spending a lot of time at this intersection. I think everybody's been seeing the fireworks going off in Venice. Obviously, massively growing product, so we have some exposure to VVV. They're doing really well. It seems to be popping off. You can also see, they're not crypto anymore, but Noose Research, which is a crypto AI collective that recently launched this platform called Hermes Agent, which is an OpenClaw competitor. They've now completely flipped OpenClaw. It's like 3-to-1 in terms of tokens that are running through OpenRouter. So it's crazy the growth rate and comeback story on the agent side. And I think AI agents and crypto are going to have a lot of overlap in terms of surface area. So there's a lot happening. There's so much happening that we're trying to pay close attention to, but it's happening really fast. It's hard to really keep abreast of everything that's going on because, of course, AI itself is turning over and completely changing every few months.
Yeah, it's impossible to keep up with. We're in that early stage of the hockey stick, and it's just every day you wake up and like, well, everything's totally changed again in the world. Fantastic.
That's right. I mean, look, it's a good feeling. It's a good feeling because it's more interesting to live in a world that changes than one that doesn't.
Yeah, we've seen more change in the last 5 years than people saw over the last few million years. So it's an incredible time to be alive. Haseeb, thank you so much for coming on the show. This has been a super exciting, super interesting conversation, packed full of value. So thank you so much.
Thanks for having me. It was a lot of fun.
Thank you. That was great. What an interesting conversation. Wow, absolutely awesome. Absolutely awesome. Thank you so much for coming on. I love it. I love bringing these kind of people on who just value and interesting insights. And I hope that this has been useful for you listening, because what a cool conversation.